What is going on, investors? Hopefully you guys are doing well out there. Time to talk about a Wells Fargo company. We're going to keep the bank earnings rolling here on the channel. Ticker symbol WFC. The company just reported, like most banks, their Q2 results, and we will get into them on today's show. Some other things we'll talk about is you might have seen here on YouTube, maybe a couple people made videos on this. You might have seen the headlines that Wells Fargo shut down personal lines of credit, and a lot of people ran with this story and said, oh man, look what it means about the economy. Look what it means about all these different things. Well, I'll talk about this. There's actually a very specific reason why they shut down personal lines of credit, and it has nothing to do with most of the narrative that came out of that. So we'll talk about that and clear that myth up for you as well. We'll obviously jump into the Q2 earnings. They were improved by a stronger economy and stronger credit quality over at Wells Fargo. We'll jump into some of the slides as well, take a look at the average loans outstanding. We'll take a look at some of the other credit data that Wells Fargo puts out, because it gives us an insight not just into Wells Fargo, but into the consumer as well, and helps you make decisions on other stocks that you might have, and just kind of gives you a broader view of the macro environment out there, which will help you with other stocks and other aspects of this market. Now, we'll jump into the profit. We'll take a look at the revenue, the profit over at Wells Fargo as well, and then we got to get over to this stock chart. Look, back in November, this was like a $23 stock, and it rallied hard like a lot of bank stocks, okay? As we saw interest rates start to melt up just a little bit in the beginning of this year, all the bank stocks took off, pretty much all of them. Bank of America, JP Morgan, they all made this monster move. Wells Fargo went from $23 a share all the way up to close to $48 per share, but we've seen a trend reversal, okay? This trend has reversed. High, lower high, lower high. So we'll talk about that, what that could mean in the future for Wells Fargo. Now, over the last year, like I talked about, this thing's up 70%. Some of it due, again, to all bank stocks rallying, but also in Wells Fargo's case, they're trying to get like the bad regulatory environment behind them. They had that account scandal where they were setting up accounts for customers without even asking for them. I personally was not a customer as Wells Fargo, but I know family members that were, and they had accounts just opened up for them. And so they are trying to move past that. One of the things that they are suffering with is they have these asset caps. So the Federal Reserve back in 2018, after Wells Fargo's scandal came out, they said, you can't do that, and we are going to punish you. And the way they are going to punish them by putting an asset cap of 1.95 trillion in place. So the total number of assets that Wells Fargo can have on hand is $1.95 trillion. And if they start to approach that or exceed that, guess what they have to start doing? They have to get rid of those assets. And how do they do that? Shutting down lines of credit. And so Wells Fargo shut down personal lines of credit, and some people took this as, oh my goodness, look what's happening to the economy. Wells Fargo is shutting down lines of credit. And it could be Wells Fargo is concerned a little bit about the economy. What they're more concerned about is staying in compliance with the asset limits that were imposed by the Federal Reserve on Wells Fargo. And so when you see headlines like this, they make you seem kind of nervous, but understand with Wells Fargo, they have a $1.95 trillion asset cap. And because bank deposits have been increasing, more and more consumers are taking their PPP loan or taking their stimulus checks or whatever it is, and they're putting it in the bank and they're not saving it. Well, guess what happens to Wells Fargo's assets? They actually go up. And so they have to get rid of profitable business lines in order to stay under those limits. So we could continue to see that. Obviously, Wells Fargo has to prove to investors and have to improve to the Fed, more importantly, that they have gotten over and they have these systems in place to prevent these abuses of practice that they had. And so we'll see if they're able to do that. Now, Wells Fargo's Q2 earnings were bolstered by an improving economy. So if the economy is improving and credit quality is improving, it would make sense that they would slap down these personal lines of credit. And so that is why those can be explained by this asset cap. Now, speaking of loans and deposits, we're still seeing a declining trend. Now, with Wells Fargo, we have to think, well, maybe some of this is to do that they have to turn away some business, okay? They can't be like a Bank of America, which we just did a video on. You can check our feed for that. Bank of America actually saw their average loans outstanding increase just slightly. So we were seeing kind of a bottoming formation with Bank of America. We'll see if they're able to follow through with that in Q3 and Q4. My assumption is they probably will. Now, with Wells Fargo, we're probably getting into a bottoming formation in terms of average loans outstanding. But again, they have this asset cap. And so it might be putting a lid on the kind of business that they're able to drum up over at Wells Fargo. Now, here's average deposits. We talked about how, look at average deposits are going up. We went from 1.38 billion, 1.4, 1.38, 1.4. Now we're all the way up to almost 1.45 billion dollars in average deposits. So deposits are trending up and average loans are trending down. That's a negative for a bank in some cases because they really actually want not necessarily the reverse, but they'd like to see these average loans increase. But we talked about, because Wells Fargo has this asset limit on there, more people are depositing money into the bank, increasing their assets. So, and loans are going down. So the mix is getting a little worse over at Wells Fargo. Now, here's some just mortgage loans originations. We're seeing that starting to flatten out. Okay, we saw just an exponential rise in real estate prices. We're seeing consumers maybe potentially either getting used to the high prices of real estate right now, or you could see this as they're rejecting these high prices, okay, because we're not back up to early Q2 and Q3 levels of last year. So it could be that we're seeing a flattening of real estate prices as well. We're also seeing refinancing come down. As you saw interest rates tick up early this year, refinancing obviously had to come down because less people could refinance at a lower rate. And so now we've got some other data here. Look at these auto loans. People have been like buying cars hand over fist. It's really interesting. Maybe they want to get back on the road. Maybe they're starting their job again and they're commuting. I don't really know what it is, or they just put off buying a car all of last year. And we're seeing some of those purchases get pulled forward because most people probably didn't drive their car as much last year and they probably didn't want to buy a car last year. And so maybe we'll see if this trend continues. But I think it's kind of interesting that real estate, which is an appreciating asset, we're seeing those trend down a little bit, but auto loans, which is a depreciating asset, so we're seeing more people take on risk there. Now, moving on to the Q2 earnings. So we are with Wells Fargo. The left-hand column is our most recent quarter. Last quarter is the right-hand column, and then we got to jump over to right here. This third column is last year. So we get a year-over-year view and a quarter-over-quarter view as well. We've got this net interest income. We're actually seeing that decline, not only just fractionally kind of quarter over quarter, but definitely year over year. And that is supported by the fact that our average loans outstanding has been going down. And so they're not making as much money on interest when you have less loan out there. And now we've got non-interest income as well. That's actually ticking up. So they're making more money through fees and other services that they're providing. That could be related to the fact that you have more customers coming in through the door, depositing money. You're able to maybe get them on different kinds of fees and those types of things as well. So we've got our total revenue actually coming in at $20.2 billion. That is up quarter over quarter and year over year. You've got some net charge-off. Those are still very, very low, especially compared to this time last year, but quarter over quarter. So people have more money in the bank. They don't have to charge off. They don't have to default. Now we've got charge and allowances for credit losses. Talked about this on our other bank video. So take a look in Q2 of last year. Wells Fargo, like a lot of banks, set aside huge amounts of money because they weren't sure. Remember, Q2 last year, everybody was in quarantine. Nobody knew what the heck was going on. There were no vaccines, those types of things. Now, so they set aside $8.4 billion in reserve because they thought maybe credit cards, auto loans, home loans, those types of things would get defaulted on. Well, they've been adding that money back into reserves because they're seeing net charge-offs are really, really low. And on top of that, bank balances are at historically high levels. And so consumers are flush with cash. They're not charging off. They're taking out less loans. So we're able to put $1.6 billion back into the coffers of Wells Fargo. You notice they did $1.57 billion in the previous quarter. So in totality, over the last 2 quarters, over $3 billion. Here's our provision for credit losses. Again, a parentheses means negative. They were able to take that down. We've got some non-interest expense. You'd like to see this flat or down, and it is. So this is basically their expenses, their employees, those types of things. When you have flattening revenue, at least on this net interest income, you did have revenue tick up. You'd like to see expenses stay in check, and they absolutely have. We've got some pre-tax income at $8.1 billion. That is way over where we were last quarter. Again, this is benefited by the fact that you have historically low net charge-offs, and you're adding back in money that you provisioned this time last year. So this net income number does look really nice at $8.1 billion. They quote unquote lost $5.8 billion in the previous year. But again, it is due to the fact that we had these net charge-offs and these charges that were set aside for potential charge-offs and those types of things. All things being considered, things look pretty good over at Wells Fargo. If you are bullish on this stock, you are looking for this asset cap to be lifted at some point. This will help explode this bank to the upside. The other thing that you have on this stock is I don't think they can increase this dividend, which is sitting at about 40 cents per share. And I don't think they can do buybacks like Bank of America can as well. I think those restrictions are, I might be mistaken here, but I believe those restrictions are still in place over at Wells Fargo until they get through kind of this regulatory environment and those types of things. So you're waiting for more positive news on those types of things. Because look, from a diluted earnings per share basis, we earned $1.38, $1.02 last quarter. So in the last 2 quarters, we've made $2.38, and we're paying 40 cents for a whole year on the dividend. This is a company that could exponentially increase its dividend once it gets this regulatory stuff behind it. Now, we see on the day, the stock's down marginally, not as bad as Bank of America or some of these other bank stocks, but we're seeing the exact same thing that we've seen with all bank stocks. Okay, they made this monster run. I have this monster trend line in here, and then we had trend reversal. Okay, we broke this trend. Now, we've done it before. Okay, notice we did it back here as well. So we started this run back in October, November, and it broke trend. Okay, but it came back up and retested that trend and went back on the upside. So that is possible. Okay, with these bank stocks, it could be just a temporary trend reversal that we're seeing here. The way you would know it's temporary is we get back above probably these highs here at $46 per share. Okay, we're sitting down here at $43 because we have a high here, a lower high, a lower high. Right now, the trend is down on this one, and you're looking for it to bounce, and you're looking for it to bounce above the previous highs, okay? And we're looking for a bounce above 46. Really, what you're looking for is a complete back test of this trend line. Notice we did it here. We created some highs here, lower high, lower high. Oh, the trend reversed. Oh, no. But then we came all the way back and retested this trend line. And so that's really what you're looking for with Wells Fargo. So you could play this a number of different ways. I wouldn't necessarily jump in here at these levels and go long Wells Fargo, okay? I think there'll be better opportunities, better setups, better confidence in terms of your purchase price, okay? I wouldn't necessarily want to go long here, but you can play some bounces here, okay? We can bounce about where we're at, right around $42, $43 per share. You would play for a bounce back up to the previous high, which was about 46. The other thing that you could do is play the bounce all the way back up to retest this trend line, okay? That is something that you see often in these types of formation. The other, when I would start accumulating Wells Fargo is when we see signs of either sideways consolidation, okay? We bounce back up here, we come back down here, we bounce, we bounce, we bounce. That type of action would make me feel a little bit more comfortable going long. The reason why I wouldn't necessarily want to go long Wells Fargo at this level, at this type of formation, is if we break this 42 level, which is right where it's like 70 cents where the stock is. this thing is going lower and it could retest 37. Okay, as fast as it moved up, you start breaking these support levels, and it can go down just as fast. So I wouldn't want to necessarily get stuck going long this stock up at these levels. And certainly if you put any of these like bounce trades on your books, if you decide to put these trades in, you're setting stops right here at $41.75, $41, somewhere in this range, because you break these levels, and yes, you are coming lower. You're coming down to 40, you're coming down to 38, or at least you have a higher probability of doing that. So my opinion, I'm kind of wait and seeing in the bank stocks. They've had a monster run. Okay, this one's up just in the last year, up 70%. So you've gotten a lot of capital appreciation on this one. They pulled forward a ton of gains. I'd be a little patient with these stocks. Wouldn't necessarily be going out and running out and buying these ones. The longer term trends are beneficial with the bank stocks. So I wouldn't necessarily go to sleep on them, because you do want to accumulate these stocks if we have increasing inflation, increasing loan demand, increasing rates. Those will be extraordinarily beneficial for bank stocks. Hopefully you guys enjoyed this video. We'll be back again with more soon. Good luck with your investments.